Hi, this is Adam McClure with Portia+Rohm Realty. We're a full-service brokerage in the San Francisco Bay Area, and we particularly focus on the counties of Alameda and Contra Costa. What I want to talk to you about today is opportunities to work with us as investors. We do a large portion of our business actually working with investors, and specifically we've got expertise in doing property renovation and resale. So we pretty much flip properties, I guess, as it's commonly known. And unlike what a lot of the gurus out there will tell you, we have a little more practical approach, and we're very specialized in our market. And I think that that's a big differentiation because we're a brokerage and also a licensed general contractor. We manage the process and we understand it both from the perspective of what the what the property is going to become, how it will look, and who the buyer is going to be for it, as well as being able to manage all of the construction process from end to end. So I think that sets us apart a little bit. What's in it for you is pretty simple. We're able to offer returns of anywhere from 12 to 24% on an annualized basis, and usually that gets people to sit up in their seat. They say, well, that's not possible. I mean, I can get 3%. Best case out of my money market fund, or I can throw it in the stock market and take big risks. Why are you not doing this in a way that's going to subject me to huge risks? So let's focus on that. Basically, there's three things that can go wrong in a construction project or in any kind of flip or redevelopment, and these are the things that you don't hear a whole lot about on the cable channels. They talk about how great it is to find these deals for them, and then take a small cut of it and hand it to them. And if they decide that it's good enough, then great. They'll find a way to realize a profit on it, and you might get a small piece. But as an investor, when you're coming into this, you're risking your capital. You're probably thinking about, well, what are all the terrible things that can go wrong? Construction's a difficult business, etc. There's basically three things you want to worry about. So first is that there's an inability or just cost overruns. You can't control the cost of construction, and therefore you end up at the end and you lose money. Second thing that can go wrong, obviously, is that the person who's doing the construction or that's managing the process just flat out commits fraud. So you need to evaluate clearly sort of the character and the track record of any firm that you're working with, and that certainly includes us. And the third issue is really that the resale price is wrong, that the market doesn't give you what you're hoping for. And to be perfectly honest, there's just one simple answer to all three of these, in my opinion, and that is have large profit margins. Most of these, well, again, most of the shows that are out there, they talk about how wouldn't it be great to make $10,000 to $40,000 on a deal. I don't touch anything for less than $100,000 anticipated profit, because by the time you get to the end of it and all the things that can go wrong my worst case scenario is I usually I'll crawl away from it with $40,000 more in my pocket, and I think that's why there's margins. That's why I can say, hey, for a secured trust deed position on a property, I can still offer you a very high rate of return. Because I need the capital, and because I pursue healthy margins. So we do this. We focus on a couple different. We focus on a few areas. We've got a very keen sense of the market because we're literally out there working this market every single day. Any property that comes up for sale that's been renovated, we're going to go look at it. We're going to see it on tour. We're going to understand it. We're going to see why it resold. We focus on properties specifically in Contra Costa and Alameda counties, and that our area of specialty right now includes from El Cerrito through Albany, Berkeley, city of Oakland, Hayward, San Leandro, and Alameda. So in that section, there's some very specific market dynamics going on that support our model, and is what's made us successful over the last about 6 years now. So essentially, the housing stock in this area is all getting really old, like over 100 years on average. And what that means is that there's a pretty substantial gap between a house that's looks kind of nice on the outside but is pretty much busted up, or is in need of major repairs, and something that's relatively new. And there's that difference is actually reflected in market value. So we specifically pursue areas where I think that there's also transitional value, where there's an opportunity to buy something relatively cheap, and even if you put a lot of money into it, there's still going to be a lot of upside because the market recognizes the difference between something that's 100 years old and something that is substantially redone. And sometimes that includes foundation work. It could include taking down all the walls to the studs and really redoing it. And believe it or not, when all this stuff is done, and the average construction cycle for us is about 3.5 months, I'd say, and that can include a brand new foundation. So we're pretty quick at this. When it's all said and done, the market says, okay, that's great. You've just taken me from something that was falling apart, basically, to something that is almost a brand new house in an area that's interesting, that may be up and coming. Most of the areas that we're trying to target, we're trying to find resale prices in the $350,000, $375,000 to $500,000 range. And the reason why that's a very specific range is because that's where we've found the greatest strength of home buyers, mostly first-time home buyers. This is, they're looking at a house less like an investment and more like an actual home, much like people have done for a very long time, up until about the maybe late 80s, early 90s. And the thing that seems to drive these buyers is they don't want to overextend themselves. They want to get into something that they're very comfortable making the payment, and even if one of them were to lose their job, they could still maintain it. It might mean a restriction in lifestyle, but they can maintain those payments. So by focusing on a very narrow range of sale price, which you're going to get a specific group of buyers, and that seems to also be where the strongest demand is in the market, and has been really ever since sort of the crash of 2008. The strongest buyer demand has been in that area, and it's been supported by FHA loans. And so understanding the FHA buyer, what they're looking for, what the financing is around that product, that all goes into the equation. That's all part of the way that we look at and evaluate these properties. So we find them through lots of different ways. relationships, through auctions, even, and even sometimes just straight off the MLS. But that's kind of that's our business, and that's we work pretty hard to make sure we're creating opportunities for investors. So getting back to the risks for a second, the reason why I think that it's just essential to have lots of profit potential in the project is again, if you don't have enough margin available, well, then your construction costs go too high, eat up your profit. Then now you've got risks for everybody. Nobody likes to come to the closing table with and cough up a lot of money. Second risk about fraud and character, I got to be honest with you. I mean, it's very simple. If there's profit in the deal for us to do everything correctly, the incentive is obvious. We want to follow through and want to do everything right, because we want to get to the money that we think is going to be there when this process is finished. So it helps mitigate risks of character. You're welcome to call us and ask for references, and we're happy to discuss some of our previous projects. And finally, if the market takes a little bit of a pullback, maybe it's seasonality, or maybe something else has happened in the national or international news that causes people to be concerned. Again, if you've got more margin in it, okay, well, maybe we have to sell it for less money, but we can still get out, we can still make a profit, we can still return 100% of the principal plus back to you as the investor. So if you want to talk to somebody that works directly in these local markets, is doing flipping successfully, and has gone, I'd say, quite a bit farther than the typical investment seminar, where they just sort of give you a little bit of quick training and throw you out in the street to go find them deals, and you want to talk to somebody who's really in this and makes this a significant part of their business, we're more than happy to have that conversation, and we'd love to hear from you. Take a look and check us out at the link below. Thanks a lot.